possible, regulation should be tech neutral. For example, consumers, investors, and businesses should be protected from fraud and from misleading statements, regardless of whether assets are stored on a balance sheet or they're stored on a distributed ledger. Similarly, firms that hold customer assets, they should be required to ensure those assets aren't lost, stolen, or used without the customer's permission.
Let's get more on this now with crypto market analyst Jeffrey Tucker. He's also the president of the Brownstone Institute, and he joins us now from Austin, Texas. Good to have you back with us, Jeffrey. It's been quite a while, but a lot has happened in the months since we last spoke. Can I just quote the economist Francis Coppola, who has this quite searing assessment of the crypto market right now. The decentralized finance DeFi bubble is bursting. The non-fungible token craze is burning itself out. Algorithmic stablecoins are collapsing and crypto lenders are going bust. So some crypto skeptics have called this the end of crypto. Are they right?
Honestly, I think that's too extreme. I mean, I have good friends who believe this. They say, oh, we've been right all along, this crypto is nonsense. I don't actually believe that. I think what's happened over this year is that we've learned things about crypto that we didn't seem to understand before, Oscar. And primarily what happened is that people came to the belief, probably without evidence, that the crypto market would move independently from mainstream finance. It would respond positively to inflation, and the stock market could go up and it could crash, and crypto would be invulnerable to that kind of attack because it lived in a sort of a world, a cyber world that was separate from the real economy. That was a presumption that many, many people held, and that's why the industry became so big and so many derivative products were developed, and why some very fancy stable coins were out there. There was just this underlying assumption that crypto lived in a kind of an invulnerable situation to the main markets. That turned out not to be true at all. And if you look at the price trends, you see it follows very closely with the financial markets in general. So the bear market in normal financials has profoundly affected the crypto market, and that has come as a bit of a shock. I don't think it's an existential crisis for crypto itself. I mean, far from it. But it is a serious problem for the gigantic industry that developed over when crypto started stabilizing above 50K, in Bitcoin in particular, and built up this enormous labor infrastructure and started rolling out new products and acting as if this future was theirs. That is clearly not the case.
Okay, and we have seen crashes in the crypto market before, and each time the market has managed to recover and even thrive. But the difference with this crash is that we're seeing high inflation across the globe, something we haven't seen in around 30 years. And in response, we're seeing central banks really tighten their monetary policy, raise interest rates, which means less cheap money with which people can buy risky assets such as cryptos. So do you believe this slump in the crypto market will persist so long as interest rates are rising?
Oscar, I think your intuition here is probably correct, because we've seen that crypto is very vulnerable to swings in market psychology and liquidity in markets in general. As I say, that's something that's a bit of a new discovery. I mean, this is the post-naive period of the crypto sector. So I am slightly anticipating that the softness in crypto prices is going to persist for a very long time. And the great hope is that as the inflation continues to roil international markets and very likely get worse based on the price trends that I'm seeing right now, that crypto will be seen as a safe haven asset, which is what it was invented to be in the first place, both an alternative to national currencies and a safe haven protection from their inflationary trends. We'll see if that holds up. That's, I would say, the most optimistic scenario right now. But you notice that the price floor does seem to be, 20K. Is it going to get lower? I mean, it could. But the people that are still staying in the markets, and they're not the industries so much, because a lot of those are being forced into bankruptcy, is the individual investors, not even the institutional investors, the individuals. in there. If they hang on for the long term, my guess is that we're going to see, eventually recovery of losses and new highs. But is that going to be 2 years, 5 years, 10? We'll see. But I don't believe this is the end for crypto. As we know, we've heard this rest in peace announcement for crypto, hundreds of times, and it's never really worked out in the past. And I don't think it'll be true this time either.
Who can say? Jeffrey Tucker, we'll have to leave it there, but really good to get your thoughts on cryptos as always. Thank you.